What is going on, everyone, and welcome to this week's edition of Keeping Up with Cranford. My name is Hugo Alves, your host with Signature Realty, and this week I'm really excited to have a special guest here with me, Chris Celestio with Freedom Mortgage, and he's really here to provide some added value and talk about this program that we just discussed the other day. I'm really excited about it, and I wanted to make sure that we took advantage of today to make sure we present it to you. So, Chris, why don't you introduce yourself, tell us and everyone a little bit about yourself, and then we'll get into some questions about this new program.
Thanks, Hugo. I appreciate you inviting me out here. I'm very excited. Looking forward to having a little chit chat with you here at the Signature Realty office. This is the first of two locations, right? This is the original location. I know you guys just opened up a second location, so congratulations to Signature Realty. Very excited for you guys. I'm happy to be here and talk about some renovation loans and some other financing options for investors as well as home buyers.
Yeah, great. Listen, I mean, we can definitely get into all these different programs, but specifically, I mean, this program you were just talking to me about, I mean, I jumped on the phone with a couple of clients immediately, and really, I want to spend a little bit of time on this. Now, for everybody who really doesn't have no idea what I'm talking about, I'm working with a couple of different clients, and they're having a really hard time finding exactly what they want, right? Maybe it doesn't have enough of this or too much of that, or the price is way outside their budget, but it's exactly what they want, right? And from talking about this program, it was a great opportunity for them to really get the best of both worlds with some additional added benefit to it, right? So why don't you walk us through, what's the name of the program, how does it work, and then we'll kind of go back and forth on maybe some of the differences, some of the qualifications, and everything else.
Perfect. So the name of the program is called the Homestyle Loan Program. It is a renovation loan program, and it's similar to the 203K. Okay, most people are familiar with the FHA 203K rental loan program, but this one is the conventional version, okay? So it allows you, it has a little bit cooler things to it. You can add luxury finishes, which are not allowed in the 203K. It allows you to roll in monthly payments if you're not living there. That's some of the highlights. We can get into some of the really great details of it. What I always tell my borrowers is that if you're looking at a home in your price point, let's just use it up, making up numbers for $500,000 as your price point, and they see all the houses in that area in the $500,000 price point range, and they don't like any of them, or maybe the ones that they do like, they lost the bid on, and they don't get those houses. So if they're really motivated and they don't want to wait any longer, wait for that perfect house to show up, I tell them to start looking at a house in a lower price point. Maybe go to $250, maybe go to $300. And what this allows you to do, this particular program, is it will allow you to finance the acquisition as well as the renovation itself. So, if someone picks up a house for $250, $300, and then maybe they want to put $100,000 to $150,000 into it to really make it their turnkey house, their dream home. You get to pick all your own finishes. You can pick the tile. You can pick the flooring. You can add a level. You can add an addition. Okay, the guy can get the man cave. The wife can potentially get her she shed. It really allows you to have a lot of flexibility. It's a fantastic program.
Got you. You almost got me with that she shed thing there.
I just learned about this. This is new. I just learned about this year. Didn't even know it existed.
So let me just make sure. So as far as these loans, and we'll get a little bit more into the grand scheme so everybody understands, but even with doing that project, the house still has to appraise for the ARV, right? I mean, they can't just buy a $500,000 house in a $500,000 neighborhood and want to make it $1 million house where it's just not gonna, the value is not gonna be there for the loan to go through, right?
Absolutely. So the way it typically works is you get a scope of work for the house, and then based on that scope of work, you get an estimate from a contractor, and that contractor will, do the diligence of giving you exactly what is included in your scope of work. So then you take your acquisition, you take the scope of work, which will be your renovation number, and then that's going to give you your after repair value. And then it takes a percentage of that with your LTV off of the after repair. So your appraisal is going to be based on the after repair.
Correct.
It's always based on the after repair.
So pretty much, you're saying I can buy maybe a smaller cape, maybe a ranch, in a neighborhood that has typically, whether it be larger houses or a good price point as far as the value of the properties, and I can buy that and add another level with this loan, right? Because I know that differs a little bit from 203K. That doesn't allow you to do all that.
That's correct. Yeah.
So I can add an additional level, make it 4 bedrooms, 2.5 bathrooms, whatever I want, really. And as long as that value is in line with the market surrounding it, then that would go through typically.
Absolutely,
right?
absolutely, yeah.
And particular kind of GC, is there anything specific about the GC that you can use?
Yeah, so there's really only a few guidelines when it comes to the contractor side of it. And the contractor has to be fully licensed, and their license has to be active. They have to have $1.5 million of insurance, liability insurance, and they have to have workman's comp. Any reputable GC GC or builder that you're working with will have those credentials.
So you're not looking for anybody in particular. You're just looking for somebody in the trade that's fully insured and licensed to do the work. So it's
100%. The borrower cannot be the GC. That's a caveat
Correct,
there.
If you're supposed to be paying the loan, you should be working.
It's a conflict of interest. Okay, so there are exceptions to that. Let's say that the borrower happens to be a licensed electrician, and he wants to do the electrical work himself. Then exceptions can be made so long as he also fits those criteria. He has his license insured and his workman's comp and all that stuff.
Gotcha. And now you said something about rolling in payments.
Okay, this is perhaps, in my opinion, one of the biggest benefits to this program, because you can roll in the monthly payments while you're not living there. So, if you're doing a full house renovation, a full gut, an add level, and, a lot of people say, oh, well, that's all great, but I can't carry a mortgage and continue to maybe still pay rent of where I'm currently living.
Yep.
So the beautiful thing about that is this program is you can roll in the monthly payments, and then you're just paying that when the project is over, when you move in. So we'll use a 6-month example. If you're, not living in the project, in the house for 6 months while the work is being done, you basically finance in those monthly payments. That's your principal, taxes, insurance. Principal, interest, taxes, and insurance. Your PITI payments, and you roll that in. And when the project's completed and you move in on month 7, then you start paying the monthly payments.
So is it just that those 6 months is just then spread amongst the 30 years, or is it added at the? So it's not deferred. It's just
financed.
Sprinkled over.
It's financed.
The rest of the months.
It's rolled into the loan. Exactly.
Got you. So pretty much, this program is going to allow me to buy based on location, right? Mm-hmm. Because maybe I'm looking for a particular location, particular size lot, which may not have the house that I want.
Correct.
Right? And the houses that I do want in that area are more expensive than what I want to buy or can afford. Absolutely. Either or, okay? I can pick the lot, I can pick the area, I get a GC to draw up the scope of work and everything and give me the cost behind it.
Yep.
The bank is then going to take all the guesswork out of it for me, because I don't have to figure out how much I should be paying the GC based on the percent of completion. They take the guesswork. They come out, right, in draws, right? I'm guessing
That's
the GC
correct.
will take out draws?
There are draws. So when you're going over $50,000, you're automatically going to have a HUD consultant. It's roughly about $1,000 to have a HUD consultant. It's a third-party consultant that comes out, and what they do is they vet your contractor's bid. So, if they're coming in there and they're saying, to put new flooring in this house, let's say it's about $8,500, and that HUD consultant says, all right, well, they come in, they're a third party, and they do their own measurements, and they find out that the going rate is really $7,500. So then they have to make sure that the contractor is falling in line with fair market value of whatever the cost of the work is.
They're not inflating their.
They're not inflating their numbers, and it's really a check and balance.
Yep.
It's good for the borrower, it's good for the contractor, and it's absolutely good for the bank. So it's really that's only when you're starting to go into $50,000 or more, on a renovation.
Yep.
But then you get your scope of work, and then after the loan closes, it's one-time closing, right? It's only one closing, and it's not a construction loan, which typically is common in commercial products, right? You do a first loan, and then you do a commercial.
You're paying multiple closing fees and
exactly.
all that stuff.
No, this is a one-time closing. Freedom Mortgage in particular does a lot of these. We are one of the biggest in the East Coast. We do so many of these loans that we actually created a whole separate department. We have like 20 to 25 people that service just renovation loans. So you go through the whole process, start to finish with us and the front end, and then once the loan closes, then it goes to the servicing department, the renovation loan department. They handhold the whole draw aspect of it. They work with the contractor. Basically, the work gets done, inspection comes out, they inspect, they said yes, the work was completed exactly as it was supposed to be. A check gets cut. It's a endorsed check to the borrower as well as to the contractor. So the borrower has to sign off on that check. So
Gotcha.
it really is, and one of the other good things about this product is there's an incentive to get this project done. A lot of people are concerned because, if you're going to buy the house and say, all right, maybe I'll just I'll find my own contractor and I'll do the work later, and we'll piecemeal it together.
Yep.
We'll do maybe a bathroom here and then a kitchen there, and then over time. So then, you have to really stay on your contractor to make sure that they're doing the work exactly as you guys agreed upon. And, that money is exchanged. Either you're giving a deposit or, you're chasing them down, because contractors, they can always be good, but sometimes, bad things happen, right? So you're chasing a contractor down. In this particular case, the contractor is incentivized to finish the job. If they don't finish, they don't get paid. So it's really, and they have to hit a timeline too.
Yep.
Typically, it's about a 6-month project. I mean, extensions can be made for a larger project like an ADA level, but we really try to get it in 6 months. The bank would like to be, people in there, the whole rental loan closed out in 6 months.
I definitely like the concept, and I don't know what you guys think, but of the HUD consultant getting involved, let's just say it's an ADA level, right? To balance everything out, right? To make sure that the number's not being fluffed, right? That you're paying what you should be paying.
100%. Couldn't agree more.
And at the same time, there's no guesswork. Well, if he's done 25%, is it 25% that I should give them? All that guesswork is out, because the renovation team is now handling that. Now they're going to distinguish if 25% has been complete, it's going to support 25% be given out. And there's also, and correct me if I'm wrong, but in the beginning, there's some money provided ahead of time for materials, right?
So
which is always a big thing.
Yes, and I was just about to touch on that. That's another perk to this loan, is that this particular product allows for 50% of the material to be dispersed at closing, basically giving the contractor enough funds to start the job, buy material, and then get the job going.
Yeah.
Typically, in whether you're, for the investor side of the world, you're using hard money, and then, you don't get a draw until work starts to happen, right? As we know. So you'll have to have some funds in reserves in order to get your project going.
Correct.
This particular product is actually a really, really great investor product as well, because not just a home buyer, not just someone who's going to be living in the home. But from an investor standpoint, I myself am an investor. I flip houses, so getting 50% of my material dispersed at closing, rolling in my monthly payments into the finance. As an investor, what do? It's money out. It's always money out, and until you sell that property, does anything even come back in? So everyone gets paid out, and then you're the last one to get paid. So by having that cash flow balance where you don't have all that money coming out, you have the 25% of your material dispersed at closing to get your job going, then just move right into the rest of the process with the draw process and getting the project moving along. I mean, I haven't seen a product like that in the conventional world that can meet it.
Yeah, honestly, I was kind of blown away when you started talking about it, and I've heard of the Homestyle Loan before. But when you were talking about some payments being rolled, not all, obviously 6 months, let's just say on average, being rolled into your loan because you're not occupying the property. Now you're not forced to hold 2 mortgages or a rent and a mortgage, right? I was kind of thrown back by that. I was like, I've never heard of a program like this. Now, so you mentioned that it works for investors also. So what's the difference in between an owner-occupied person? I'm buying my house. I want to make it beautiful. I want to make it what I want with the market supporting versus an investor. What's the difference? Am I coming in with the same amount of money as you are?
No. Typically with an investor, you're looking at 85% LTV. That's acquisition as well as your renovation costs. Okay. So from an owner-occupant, single family, you're looking at potentially, if you're a first-time home buyer, you can go as low as maybe 97% LTV. So you're 3%, bringing to the table. That's pretty attractive, huh? Well, you can go 5%, obviously. You can go 10%. You can go 15%. You have options, but you could go as low as 3% down.
Is there any difference in interest rates versus me doing let's compare it to apples when it comes to just owner-occupied, right?
Yep.
Investor off the table. We can definitely touch more on that, but from a first-time home buyer or I'm upgrading, whatever the case may be, but I'm using either a standard conventional loan or I'm going with this Homestyle loan to renovate and make it what I want. What's the difference in interest rate?
The rates are the same. Are the same. It's you're looking at same fixed rate, 30 years. I mean, obviously you can do lower than that, but standard is 30-year fixed rate mortgage. minimum is 620 FICO score, and depending on the debt to income ratio, you're looking at potentially rates in the exactly where they are now, no points. So anywhere between 4.5%, 5% is typically where they're at right now. That's they're trending around. So
Okay.
you're looking at and no points. It's pretty attractive.
That is pretty big. So, especially for an owner occupied or somebody who's looking to come in and do this, points is just simply what you pay to originate the loan. Or you hear that a lot in the investor world, right? 2 points, 3 points, 4 points, and a lot of times that
that's
changes
just the fees. That's just money out
Correct.
of pocket. You never recoup that.
Absolutely.
You
That's what
never
I was gonna
recoup
say.
that money. There's buying down points, which will bring the rate down for the APR that you're going to pay on the loan itself. That's different, but points in itself, which is a cost, there is it doesn't.
It's lost money. I mean,
exactly. It's money out.
Yeah, it's money out that you're not getting back. Now, from an investor side, now, am I getting 4.5?
No, from an investor side, it's a little bit more. Okay.
Okay.
Maybe 5.5%, 6%. Okay.
That's still not bad. I mean, hard money.
But again, no
9.
points.
No points.
Yeah, hard money has come down a little bit in the past couple of years. There's a lot of money that from Wall Street money to private money that people are pulling together and they're lending out. So rates have started to become very competitive. You're starting to see anything anywhere between 9 and still 12% out there, between 2 to 3 points, origination points. Still, even if on the low end you get a 9 and 2 deal. I don't know how you can really, you compare it. Now, there is some caveats to that. Let's say that you got this deal and you have to close in 2 weeks.
Okay.
I'm going to tell you that you're going to have to go hard money and work with a really good, reputable hard money lender that's going to be able to get your deal closed in 2 weeks. We're more traditional. We're investor friendly. Freedom Mortgage is an investor friendly, traditional bank. We're full doc. It's going to take more to get that. We're going to need more time to get
Correct.
your loan closed. There's a
lot of moving parts.
There's a lot of moving parts to it. You have to get pre-approved, and then you go through that whole step. And then once you get that, you get your contractor in there, start getting bids. Contractor gets vetted. Maybe you need a HUD consultant. So we can close these anywhere between 45 and 60 days. And really, where I see the drag along there is on the contractor or the borrower side. When you're requesting, when the bank and our side is requesting some documents, and it takes you 4, 5, 6 days to get things back. That's where you see a little bit of a drag.
Do you guys have? I mean, this because I'm all about being efficient, right? And making my buyers efficient. So, and there's mortgage companies out there that what they'll do now is they'll get a commitment letter, right, which allows a regular conventional loan or FHA even to close in as little as 18 days. Let's just say. We know this is different, right? Because there's some additional steps.
Yeah, with the renovation loan, there's some other moving parts.
So is there a possibility that a buyer can get up to underwriting and be that much closer, and then the only moving parts that are left are the possibility of a HUD consultant and how fast or slow the
absolutely.
GC?
I mean, at Freedom, what we do is, we really qualify the borrower. We go through their income, we go through their debt, we run their credit. We put the file together, we see what their assets are, and then we put it through a soft underwriting program. So, if you're getting pre-approved by me, I already know that this loan is going to close. You're not going to get a pre-approval from me unless I know that this loan is going to close. So whether we're doing a renovation loan or some other sort of loan, you're not getting that letter from me without, me really vetting the borrower and knowing that, there's not going to be issues when it comes time to getting a commitment.
Gotcha.
know?
And now, and then as far as it comes for the GC, let's just say somebody's on the fence and entertaining this program, right? Really thinking about it, and now they're talking to contractors because that's what we typically see, right? We make a decision on something, maybe we're interested in it,
right?
Maybe we're not, and then we start talking to all these other parties, and we get everybody involved, and everybody has a different.
Everybody's
opinion.
got an opinion.
Oh,
Yeah, exactly. Yep.
Everybody's got an opinion. So let me ask you, let's just say I'm a buyer, right? And I'm 100% going. I don't know who the GC is going to be. I don't know any of that yet.
Right.
But if I'm meeting with GCs, right? Maybe they're just giving me a little walkthrough, or maybe I have a friend who comes with me. Is there anything that I should be asking of them to know that they'll have all the documentation ready and set from when you guys need it?
All right, so the three things I mentioned earlier, you got to be licensed, insured, and license got to be active insured, and then they also have to have their workman's comp, and then on top of that, the scope of work has to be detailed, itemized out with your labor costs and your material costs.
Separate.
Yeah, and that's really, really important. So,
because a lot of
they
guys
can't
will
just
just
lump
pool
us
it.
some in. All right, we're going to do this bathroom, and this is it's 15,000 for the bathroom.
How could you disperse 50% of the material?
How are you supposed to do it on the draw? It's and additionally on that, it really needs to be itemized. You need to work with now in FHA. There is the website and the HUD website where you can actually go from the list of contractors.
Okay.
And you can pull from that. So these guys they're
vetted.
They're vetted, and they know the process. You know what I mean? If you go to just a handyman that's not familiar with the process, not really good with paperwork, is going to be maybe has all the credentials, but does not know the process and is not good with paperwork. It's going to be a little bit of pulling teeth.
Gotcha.
Do your homework. We tell our borrowers get 3 quotes. I know it's sometimes people are like, oh, how are you going to find the time? You got to get a contractor in here. You got to give 3 different scopes of work. It could be a little bit.
The agent can help with that.
The agent should help with that. They absolutely should. These are easy loans. You bring up a really good thing from an agent perspective. These are easy sells for you guys.
Absolutely.
Because it's low-hanging fruit, in my opinion. All right, you have a pool of houses that they don't like any of the houses in that $500,000 price point. So what are you going to do? You're going to show them something a little lower on rundown property that is, or maybe not run down, but has a potential to be something a lot nicer. So this should be adding to your numbers and helping you get 1, 2, 3 extra listings, a quarter. You know what I mean? If you can do that, that should significantly, maybe you can get another 12 deals done a year. That's pretty amazing. Once, we work in unison with you guys. So whatever the agent needs, we help out with. And then the agent should be also helping out with the borrower in coordinating schedules to get contractors in there to get those quotes.
Absolutely. No, that makes sense.
Yeah.
And I mean, honestly, when you said this program, like I mentioned it in the beginning, I immediately clicked in my head because I've had conversations about the potential of somebody being able to absorb having a home, but just wanting a larger home. And then what does that look like when you submit an offer and you own a home and all the other little moving parts, and just as the ability for them to roll these 6 months in, sell their house within those 6 months, right? And then just be ready for a fully renovated house, or renovated to the effect that they wanted to.
Right.
And just, you get to pick your area, making sure that it lines up as far as value goes. You get the home that you want. You can defer it up, or you can
roll and finance the monthly payments.
Yep, finance the monthly payments for an additional 6 months, maybe an extension on a case-by-case scenario.
Right.
It's a win-win. Can you do this on multifamilies or just?
You can do this on multifamilies. On FHA 203K, it's a low percent down. Talking about 3.5% down. But on a home style, for owner occupant, you're looking at an 85% LTV. So can still be done. I'm working on one right now as we speak. It's a duplex. One half of is totally gutted, and the other half is move-in ready.
Okay.
So he's a conventional borrower. He has the money to put down. He originally wanted to put 3.5% down, so he has the option if he wants to go FHA. Okay, but really he's a conventional borrower. He has a 780 FICO score, money in the bank, first-time home buyer. He'll end up, if he goes with the home style route, he's going to end up. He'll just have to.
There was a good point, because I also have one of the couples that I was talking to you about Saturday. They're conventional buyers, right? They have a great credit score, they got great income, they have money for a down payment, but they're trying to over time build a larger portfolio. That's really their goal, okay? So if they can go 203K, because they're not going structural, they're paint, kitchen, tile, basic things, right? Just to really improve, and maybe some of the mechanicals. What's the difference? What's the difference between me going 203K and Homestyle? Is it more costly in this route? Is the interest rate better? Are they more lenient?
Well, the PMI is going to be different. It'll be a little bit more expensive for the FHA.
Okay.
Okay, so that's definitely going to be one. They're only going to be able, if they're trying to build a portfolio, they're only going to be able to have one FHA at a time.
Correct.
Right, so then they can always refi out later or refi into some conventional.
If they have equity.
If they have equity,
Yeah.
Okay. So that's pretty much, the bulk of it right there. I mean, the interest rates, they're roughly about the same. I mean, if they're a conventional borrower, okay, typically it's the PMI is going to be the big differentiator. I mean,
Okay.
if they have the money, it's always best to have the conversation to see what the options are. Have a strategy session with them. Have them speak with us at Freedom and let me know, what exactly they're trying to accomplish, what their short-term and long-term goals are. If their long-term goals are to build a portfolio, then we talk about, what it's going to take and how many they're looking to acquire by X amount of time, and then we can put a plan together.
Gotcha.
You don't want to shoot then aim. For something like this, it's going to take a little bit more planning. So you need to line funds up. You need to make sure that you're going into the deal using the right program for that deal on the going out the gate.
Yep.
So
that's great, obviously, because we're going to close it out with this. But I mean, if you guys are looking for a strategy, something a little bit more than just your typical borrower who kind of seals your deal and then just walks away, see you later, maybe sends you some wine and some cookies. Freedom Mortgage is the spot, right? I mean, if you guys are telling me that you're going to sit there with me, and if I say I want 30 properties in 10 years, whatever the case may be, we're going to start now to plan, making sure I got the right
100%.
loans being processed. So then a year down the road, 5 years down the road, I don't run into issues because of the loans that I used in the beginning, right?
100%, yeah.
So Chris, where can they hit you up? Where can they contact you?
They can come see us at 231 Union Boulevard in Totowa. That's where the Totowa branch, that's where I'm located out of. You guys can reach me on Facebook, on Instagram. You guys can also reach out to download my free app if you text Chris Alessio, ChrisAllessio. You text that, it's one word, to 363-260. That's what you can download the free app, and that's where you can find me.
Get a free app and contact. Guys, once again, my name is Hugo Alves with Signature Realty. It's great to have you guys. I hope you guys found this informative, and we'll see you guys next week.